Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back, fresh off a rebrand and ready to help as Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com, and that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address. Disclaimer time. This is where I tell everyone to lighten up. It's just a podcast. Trading is like that roller coaster at the amusement park. Thrilling, unpredictable, and potentially stomach-churning. What works for one person might leave another clutching their hat in the wind. Our hosts and guests, they're awesome, knowledgeable, full of insights, but we're not financial advisors. So don't rush to make any investment decisions based solely on our banter. Always consult with a professional or do your own research. Plus, let's face it, we like to have fun, laugh, enjoy the trading ride together. It's all in the name of good podcasting fun. So remember, take it easy, don't bet the farm, and keep your seatbelts on at all times. Thank you for listening. Alright, hello everybody. Welcome to the China Shop, home of the podcast formerly known as Two Bulls in a China Shop, briefly known as True Trading, and sometimes referred to as the Dinosaur Podcast. But for now, and for sure, and most definitely forever now, be henceforth known as the Band of Traders. Big shout out to Kevin, his wife, for blowing all our ideas out of the water. And check him out at fmtrades.com if you're into trading Forex. I am your host today, aspiring trader Kyle, and joining me tonight we have Baba Yaga and Mr. Banks of Vanta Trading, and Perdue gets to make his debut on the new format. On the docket tonight we have fading trends and when not to, followed by discussion on Crudele's surprising take on why 90% of traders fail. After that we'll look at the past week in the good, bad, and ugly segment before wrapping things up with some new bold predictions. And speaking of which, did anybody's prediction come true?
I don't think that there was a bank failure this week, so I think I might have taken it.
I think you might have, and I tell you what, I've not had more fun reading bank headlines all week this week. I think I've been posting you like every day, like, oh, SoftBank's in trouble, oh no. Let's see, what were the other ones we had? I think Flurry came pretty close, actually. He wanted AI to gap fill and nuke, which it didn't fill the gap, but it did drop 5%. That hit his mark. I think that would have been his 10% call. Michael Burry's profile is still up, but I did get a screenshot of it looking emptier than typical. And then, Baba, you had a crypto crash, I think you called for. That didn't quite happen.
I mean, you got to make a prediction. You got to do what you got to do, bro.
Dude, you got to go bold, man. You got to go bold. And you did that. I think you win the boldness, but I think we give Banks the accuracy. All right, should we move on and do some updates here? So coming up this Thursday, we've got the next options episode with Eric Smolinski. Next Friday, Rich Friesen is going to be joining us on this program to talk about trading psychology. And again, if you want to listen in to the live recordings, we do that on the Discord every Friday evening. Those links will be in the show notes. And last thing I'd like to say is if you'd like to reach out, you can DM us on Twitter, Discord. You can even send us an email at suggestions@financialineptitude.com. Send us any suggestions you have for topics, guest ideas, or even if you want to star on one of these things, we'll get something worked out with you. All right, Baba, Banks, anything going on new over at Vanta?
I'll let Baba take that if he wants it.
Yeah, because I know there's something going on, right?
So coming up in Vanta, what do we got? Okay, we're revamping our website.
Oh,
so yeah, we got this lady. She's pretty cool. You probably met her before.
I'm familiar.
And she's a goat at everything that she does. And she informed us that, in her opinion, if she did not know us, then she would not have a clue what exactly it is that we do or what makes us different. So she's helping us with that. Sent over a copy. It's looking great. So we're excited to get a better word out there for what we're doing.
Yeah, that's going to be, you're going to enjoy that. Website updates are always fun. Also, you've been putting out some YouTube content too lately, haven't you?
Actually, I have a bunch of stuff, but I'm holding out on putting it out there because, but very soon. I've recorded a lot of stuff. We're trying to get better at recording morning plans, trying to get better at recording some live trading. I'm just not the best at remembering to start OBS up. So your new job is to remind me of that every day.
I'll make you a checklist.
Yeah.
All right, Perdue, what about you, man? You got anything you wanted to promote?
I have nothing really special besides my wife's book, Nothing Left But Ashes. That's available on Amazon. Besides that, just daily grind.
Nailed it, dude. I'll let her know you crushed it this time. All right, guys. On the docket today, we have got fading trends. Is one of the big struggles that I see all the time from people is that they want to pick those bottoms and tops. I know I do it a lot too. Just kind of want to hear everyone's thoughts on like how you treat trend days and what do you need to see in order to make the trade, in order to try to fade one. So let's kick things off with, how about Mr. Banks there?
So the question about picking tops and bottoms and which, on trend days where to take stabs basically is what you're asking.
Yeah, because you'll see a lot of guys, they'll miss the long, I think is what ends up happening. And then psychologically, you don't want to take the long because you think you've already missed it. So you're trying to catch the next trade. You're trying to anticipate where that top is going to be, and you just end up getting chewed up.
Yeah, so I would say in my previous life as a trader, I would try to pick every top and bottom. And I think now currently it's to me it's all based on where the draw is, where liquidity sits, where we should target. So in those spots, I probably on any given day have a handful of spots that I have outside of what our range is.
Mm-hmm.
And basically anything outside of those spots is just it's a no-go zone. And if it sets up, and there's a lot of times where like on a day like this, like we traded through a key spot, a swing high that I was kind of interested in, and we gave zero pullback on that move. And if you're looking at the other products, you can see why. But if you're looking at NQ on that trade, I mean, the ideal setup would be a push through pullback kind of set up some sort of bearish structure, at least on the smaller time frames, and kind of get that test to the downside. And if it's not going to give it to you, it's just it's one of those things where you kind of pick up with maturity and trading that you just don't test the button anymore because you've tested too many times. And I felt the pain on those type of moves. And and I think the hardest spot is like once the move is gone, it's that FOMO atmosphere of the fear of missing out. And I think it's really hard to jump into a trade like 50 points higher than what you think the low is. But on a lot of those days, I mean, if we're not proven to me that it's over, if you can find something on a smaller time frame, low risk, where if you're going to be wrong, you're going to be wrong in a key spot and it's going to, reverse. I think that those are great spots to be, picking. And I think it's easy to be a part of that trade.
Yeah. I think that makes a lot of sense. So what exactly are you looking for to indicate to you that maybe that trend is turning?
Yeah. So, when we like my key setup is like a liquidity sweep of some time frame, like a, 1 hour or something along those lines. Or if we start breaking down on like, if we're going up, if we start breaking down on bullish structure.
Mm-hmm.
So, if we start breaking that down and we start to turn on the smaller time frames, those are the key things that I really look at. Like you'll see the smaller time frames obviously change before the bigger time frames, but as long as the bigger time frame, structure is holding, then there's no real reason for you to be flipping, at least in that, in that scenario. And and on those type of moves, it has to be A+ setups, on those type of moves, especially when you get really extended like today, on Friday and Friday can just be like the shenanigan moves anyway. So I tend to, try to stay out of it. But those type of structure moves, they have to be A+, especially when you get too far extended, because we just tend to do whatever we want on Fridays.
There seems to be a mentality too of like, or I guess the trap that I tend to fall into is it's gone so far it can't go any higher than this, and that isn't necessarily the case, as I've learned the hard way.
Yeah. I mean, it's tough. It's tough for sure.
What about you, Baba? What do you look for?
I feel like so I have obviously traded against the trend a time or two. In fact, on Monday, no, Tuesday. It was Tuesday. Was it Monday or Tuesday? Tuesday. Monday was a fine day. Tuesday, I had this anticipation of price moving higher, but not in a substantial way. In fact, I was looking for a trade out both sides of Monday's range.
Mm-hmm.
And I think a couple hallmarks to look for. So like, and kudos to Flary if he's around or if he listens to this. A no tick OR obviously is something to watch out for. If
Can
we
you explain
don't
that real quick?
trade, so 30-second OR. So a lot of times when we open in a certain posturing, it'll be like make or break for the bulls or bears in a moment. And if the 30-second OR, so in the first 30-second print, if we don't trade, if we only trade out one side,
Mm-hmm.
then that's like 30 seconds into the market or 2 minutes into the market. That's a clue that we could have a strong trend. The second clue is, have we or are we interacting with VWAP for the RTH session from 9:30 open? So obviously, if we trade above the OR, then we're and it moves at all, you're going to be above VWAP. So when we come back to that, is it a swift tap and go? Do we not even touch it? So no or little interaction back on the other side of VWAP would be the second clue that you might have a monster on your hands. And then the third time frame or the third clue to like check is like after about 5 minutes. After about 5 minutes, it's we tend to like base a little bit and then see that continuation. So that's the few things to watch for, just to be like, oh, we might have a trend day on our hands. Then I think much to like Bank's point, like as we move higher, there's really only two reasons to take a short. The first reason is if you come into a key structural level. For me, that could be a balance area high, a value area high, or a session high. So Asia session, London session, prior day's afternoon session or AM session high, the high of that time period. Those are great pockets of liquidity that we could have just been on a mission to grab, and then there might be an opportunity for a reversion trade. What I've attempted to do, and I shot a few shots that on Tuesday, but they were in key spots, and it was, I would wait for, smaller time frame type setup and take that trade. As soon as it goes back against you, your risk is tight. It's not the end of the world. The problem comes when you abandon your setups and your spots. So if you've got 3 spots to shoot a shot and you think there's this huge opportunity to the downside, the later in the day that we get, or the later in the morning, I think the less likely that reversion really becomes. And that's just something to watch for. And then really you can almost sit on hands till lunchtime and then maybe look for where we are with regard to time for an attempt at that. But the bigger win is to try to hitch your wagon to that. If you have a level 30, 50, 70 points above, try to get on board and get bullied out of that long trade instead of trying to, or get bullied out of the short trade instead of trying to fight and make the trade, something difficult.
That's I like the way you said that, get bullied out of the trade, because I feel like that's something that Perdue, I think you do very well. Is I hear you all the time saying like, I don't like this, but I'm taking it because it's a setup. Do you have any thoughts on the topic here that you want to share?
Oh, absolutely. I can't. I thought Baba would take away the idea of using balance areas.
Yeah, I left that for you. I left it on the table for you. I was going to talk about that. Proximity to open to that I was going to talk about, but I think you take it away.
That for me is the context of every day of being in trend or not in trend. And so the whole idea is whether you know what balance areas are or how you define balance areas. It's if you define an area of a range and you open outside of that range, not only do you open outside that range, but you hold that outside that range at the open and consolidate above that range. That to me is a perfect setup for a range day.
Mm-hmm. Okay.
That is like my A+. Like I will lean into it very hard to go trend day. Today, which is November 10th, was a little bit more of a struggle because we opened up right in the middle.
Mm-hmm.
And my favorite phrase is "don't diddle in the middle." And I use that 50% line of my balance area as my bearish below, bullish above, and we kept trying to go lower, but it was a controlled and structured short. Like every time it would break short, it would kind of react and bounce, and it just would never get traction. And then I saw a smaller time frame pattern, and I reversed and went the opposite direction. But the whole idea is that that's where how to define a trend day to me is everything that has to do with balance. It's if I open in balance, I don't like trading I know Baba and Banks love trading from the inside out. I like trading from the outside out. I will buy higher and sell higher. So
You're
that's
not, you're not
different.
you're not into like fading the edges of the balance area until they force you out of until they break out of the range.
Oh,
Like,
I absolutely will, but it
okay.
needs to prove it to me first. Yes, I agree. That's the real decision part at the open. Are you holding outside of balance? Are you holding above the support? Are you like a perfect the A plus setup to me is like, let's just say like today was a little bit different, where you are holding outside of balance on the high side, you're holding above previous day high, and OR is holding above. That to me is like the perfect recipe. I will buy the OR high. I will buy every dip just to go long, because you have every indicator telling you, or indication to me on my chart telling me to go long, and there's no reason to touch the short button. If, for the example, to fade that mean reversion back to the middle is when they rip the high and then immediately close below, and then they start consolidating inside the opening range, the 30-second opening range, or they consolidate underneath my little box of my balance area. That's what throws a red flag. And that actually happened, what was that, Thursday?
I don't remember.
No, that was Thursday. We were talking about it on the voice chat. It was, so I was like, I was going short, and it was actually my reluctant trade.
I do remember that.
Because
Yes.
Exactly that was because it was on Thursday, November 9th. I missed the original short, and I was kind of irritated that I missed the reaction, because I'm not a very good shorter. I don't like shorting. It's just difficult for me. And I'm very much more aggressive on the long side, but I did miss the initial short, and I decided to just go short based on a few different strategies that I have. And it pulled down and went way farther. I think it would have hit two of my targets on my original entry had I followed through and was quicker enough. And the second time it did the same exact thing. And actually I had a very good day on Thursday because I was just following the strategy.
Following the strategy. I think that's the key word right there. Because I feel like a lot of the mistakes that I make when I try to fade the trend, or when I abandon the strategies, or when I try to anticipate, or how do you put that, Baba? I think you enforce my will
innovate.
on the market.
Try to innovate. Innovate an entry, and I think too, to Perdue's point, I have worked pretty hard at being able to be a part of the trip, and I'm quicker than Banks probably, and quicker than Banks and Perdue and most people at like making a decisive, all right, this is where we're going, or this is what I'm doing. But that comes from exactly what we're talking about, which is I used to be very much a sit back and wait far too long for price to get to some predetermined level that's got to be where we stop, and that's where I'm going to pile in. And I realized, like, if I have this area that I'm really interested to do business in, why don't I just figure out how to take part in the journey to get there, and then we can reevaluate it once we get there. The other thing I think is interesting that Perdue touched on is the idea of like these balance areas. So props to him, because I've actually started strongly incorporating value areas from volume into some of my work. And one of the things that really stands out is, and I've tried to get Perdue to look at it, but he's so busy, is this session over session. As we're dividing the sessions up currently, these session over session volume value areas, they create a little tighter than like a daily profile, and a little more information, because you can see session over session how we're building value and how we're building the volume profile. And it creates, I think, a little quicker opportunities. And so today, when we snuck back inside of the session over session value area, that's really when we started to kind of see the potential for this upside trade. I think, a lot of us hitched our wagon to at that point. It's just super interesting. There's a lot of ways to quantify what's happening in the market, and I really think that knowing if we're re-entering a value area, what's the trade? And we talked about that in the pre-market plan. Here's the goal for sellers. They've got to continue this move down and break out of balance. And balance and value are two different things. Balance would be, for me, balance is the lowest low or the highest high that we've made while having overlapping value.
Mm-hmm.
The value area is just simply the overlapping value. Every time it overlaps and moves, that box grows. When we re-enter into value, then the trip is from value area low back to the midline, like Perdue is talking about. And then if we find traction at the midline, you bet, you want to be a part of the trade to float to the top of value. And if we get to the top of the value, the next target is balance area high, which, to Bank's point, balance area high is always going to be two things. It's going to be almost always it's going to be a session, like a session high, Asia high, Euro high, a New York AM or PM high. Therefore, it's always going to have the potential to be a liquidity grab and a reversion opportunity. So just having those ideas at play in your mind as the day starts to open, that's why we look at that same couple charts in the same order every morning, because you kind of know what's on the table.
Having a consistent approach to that should help with the pattern recognition too.
Yeah, and your familiarity with the nuance of how we engage with those goes up substantially. The more times you watch the same things unfold, it's like today, the Friday the 10th. Like when we rolled up off the open and failed to take that high, there was a session high that we just fell just short of. We roll all the way down, and we take some intermediate lows, but we failed to take that key low, that key session low from the I think it was the Euro range, if I'm not mistaken. Well, at that point, we've got ourselves in a conundrum. Are we going to have a balanced day where we just stay inside the range all day, or are we going to express back up, challenge through, re-enter that balance area, and really unwind? And thanks to you, Kyle, with all of these not Pine script, but
oh god, yeah, the Chat GPT's Python code.
All the Python code we've been working on. We know that Friday, out of any day over the last 15 years, it has the most likelihood to make a new high on the week or a new low on the week. And so that was actually kind of a guiding light for me, like a guiding idea today to smash into those longs, because that, again, the sellers lately, they have just fumbled it, dude. Like every time they get the ball and they get down there close to actually accomplishing something, and most people probably think, oh, they did it, they've wrecked everybody. Every time they fumble it.
Yeah.
And we just saw that happen again today. And the awareness of the potential of a Friday, I mean, it allowed me to make a good decision. And I'll say about that Fridays as well is not typically a day that I trade larger size. So I'm trading like less than half of what I normally would today. And still was able to manage, a reasonable day, just because of the size of the move. And I think that's the cool thing about Fridays. It allows you to size down. And if you catch that expansive move, or if we're set up like today with this possibility to rotate all the way through this area, and I think we went higher than most people assumed we would. But yeah, it's just, having all of that sorted beforehand, and then being ready to kind of not read the tea leaves, but pay close attention.
Go ahead.
Sorry, repeat the statistic that you said.
So Fridays have the highest percentage chance of any day of the week of making the weekly high or the weekly low. And it's a
So
staggering percent. I don't remember what it is right offhand. I could flip through my notebook, but
no, like I love that statistic because you both know how much I
Friday's
love
your
Fridays.
banger. Yeah.
Oh, that makes a lot of sense now.
Like
Yep.
serious, like I didn't know that statistic until you guys just said that, and you guys know how much I love Fridays, and it goes into my trading. Maybe it's because I look at those higher time frames, and those are my goals, and those are my targets, and I go for them. Like it is crazy.
What? Yeah, I got the stats right here actually. So from 2010 to basically this week, the weekdays with the highest close, Friday is almost double the next closest, which is Thursday at 146. Friday is 250 of the weeks that set the high.
Yeah, and the cool thing is too, to express that as a percentage over all the other days, and then you're like, wow, that's that's really interesting. And this may play into how I approach Friday. So a lot of the work we've been doing and old data that I have from my trading, like Mondays have typically been a weaker day, like less profit, and Fridays typically. I think that Fridays actually hold a lot of unlocked potential for me. Like the trade I took today, if I would have taken it on a normal day, it would have been a monster. I mean, it
Yeah.
was it was great, right? And it was good on the size I had, but under a normal day, that would have been like I don't know, like a week maker or maybe a month maker. And so I think there's some possibility for me to grow in my ability to navigate Fridays a little bit. But yeah, knowing the volatility, the possibility, the stretch, the reach that Fridays can have is definitely a
It
tool in the tool belt.
it does go against the grain. Like it's Friday. You don't want to screw up your whole entire profit center for the whole entire week. You don't want preservation Friday. You don't want to screw up a whole entire week in one day and then simmer on it.
Well, maybe that's why they call it Preservation Friday, is because so many people let the emotions get the better of them and try to make up the losses of the week, that it allows that many people to get off sides.
Yeah, it's unfortunate, man. There's people that lost a lot today.
Yeah. Oh, yeah.
Some people that were, I don't know that anyone in our room. I guess it's possible. People do whatever they want, but I know we some people we still talk to that aren't in our room that we've worked with in the past, and specifically one person comes to mind. Man, he just kind of really got wrecked today, trying to fade that. And really, there were probably, I don't have my charts up. There were probably, I mean, there might have been 4 places. Banks, you probably might be able to remember. There was probably like 4 key highs that we were kind of looking at, thinking like these would be places. Maybe those are places I scaled, except the last 2 because I ran out of stuff to scale.
You'll love that.
Yeah, which is a good problem to have. Which I like what Max said. Like, well, if you're trading with trend, you're always leaving something on the table.
Yeah.
I was like, that's a really great comfort because that is the way it goes. But yeah, I mean, that's the decision I made to trade small today, and like I do most Fridays to trade lighter size, is because you've worked hard, to put in a good week, and Friday has the potential to get you kind of all sorts of messed up too because of how strong the moves can be. So
it also sounds like too, like the consensus among the group is that you're not going to catch those V bottoms and V tops either, right? Like you have to see something to convince you that the strong side is done.
Yeah, you need to take something that matters, and then you need a setup. And here's the thing: like Banks has been helping me with this for a long time, and I think I'm starting to get a lot better. Because I've traditionally been a sucker for sniping a high or a low, and that's really fun. Like that's definitely like how I got the nickname, the Baba Yaga shtick and all that really came from snagging sweet entries or whatever. But if that move, let's say there's 75 points to the next key spot that you would be considering a possible reversion, whichever direction. If you are 15 points or 20 points off the low, before you get a setup that like is great. Um, there's still meat on the bone, you know.
Plenty. Yep.
Yeah, there's still plenty.
And you've actually got some confirmation that maybe this trade is the right one.
Yeah, and if it's gonna go, it's gonna go. Like if it
Mhm.
and that's the thing. Confidence in what you're looking at for your setup, like confidence in what you need to see to pull the trigger. If that is right, then stops aren't the problem. Like we go. Like it
Yeah.
goes. So that's another, I would say, back to the question of fading trend. If you take an entry, take a stop. Take an entry, take a stop. Guess what? Take an entry, take a stop. Guess what? You're going the wrong way. Is that normally how your trades go? Normally, your good trades, you get in them, you go to TP1, get some pullback, maybe add, whatever, continue, scale, whatever. Like that's how a trade's supposed to go. It's supposed to be easy. And if it's not easy, then you're on the wrong side.
Shouldn't be taking a bunch of heat or stressing over whether it's going to take your stop or not before it catches. Yeah.
Yep.
All right. Anybody else have any thoughts on fading trends then before we move on to the next one?
Don't do it.
There you go. That'll work. All right. Let's pause for an ad break. Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back, fresh off a rebrand and ready to help as Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com, and that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address. And all right, let's move on to the next one here. All right, so I saw an interesting tweet, and yes, I'm still calling it tweets because I'm 40 and fuck Elon. From Crudele today.
What would you call it otherwise? An interesting X?
I think they call it posts now, actually.
Yeah, I even heard Elon struggling to what to call it now.
Yeah, it's because he doesn't know what he's doing over there either. I think he's just trying to nuke the value so he can get out of the loans or buy them back from the banks at a discounted rate. No, but Crudele had this really good tweet today that said that the reason why 90% of traders fail is not because they can't make money. It's because they can't make as much as they want. Curious if anybody has any strong feelings about that statement one way or the other.
I don't disagree with it.
Yeah, neither do I.
Yeah, big problem.
What do you explain why? Like, what do you think that is?
Because everyone has Lambos in their head. I'm serious. Like, and that's actually it's a personal experience from my own point of view. Is yeah, I had Lambos in my head. I had big dreams, aspirations, and was always shooting for the stars, and put risk on to create a Lambo.
Mm-hmm.
And it really, that's what you're dealing with. You're dealing with a calculated risk in a casino atmosphere. And guess what? The math always wins. And
yes,
that's what it has been for me, is that the math of my back testing, my strategy, my statistics now has given me the confidence to take those trades, even though I don't like them, that you guys hear me talk about on the mic. I don't like taking this, but I'm gonna take the damn thing because the thing told me to take it. That's it. Like, I don't think a lot of traders understand that you can be profitable and lose 60% of the time.
Yeah.
Because
if you've got a good risk to reward profile, yeah, that's definitely reasonable.
If you're 2-to-1 ish, I don't actually know the exact statistic, but like if you're 2-to-1, you should lose 60% of the time. That means every 10 trades you lose 6 of them. Like, it's just like it is really hard on your psychological effect to lose that many times.
Yes. Yeah, I think I read another statistic that said something about like how many losses it takes or how many wins it takes to overcome the feeling of one loss. And that's pretty substantial.
Yeah.
That's what always blows me away is, and that's actually kind of a turning point for myself as well, is relying on my own statistics, my own back testing, my own forward testing, and realizing that you can take that third loss in a row and just go with it because it says from your experience that it'll win. And that's really the hardest part, because every trader, every newbie trader is looking for that gizmo, that switch, that thingamajigger, whatever you want to
They
call it.
want the easy button, we
Yeah,
call it, right?
exactly.
Yeah.
Yeah, I like that quote because it captures a lot. I mean, it captures a lot of some of the challenge that I've navigated and have been navigating. So you trade, once upon a time, God, if we just make a couple $100 a day, $100 a day, that'd be crazy consistently. And then all of a sudden, that's kind of like, whatever, And then that grows and that grows. And then you get to like a tipping point where you're right on the edge of emotionally what you can manage as far as size. And I went through a stretch where I just piled on more size and more size. And the good days are really good, but the bad days are tough. And that emotional tax is tough. And so reeling all that in and trying to think of the money that we're making as more than just numbers on a screen, I think is a big part of it. So I know everyone, $28,000 today, whatever. Like think about the year, think about the month. Like the path to 10K a month is not a difficult path. From on the one hand, you're talking $500-600 a day, and you're six figures a year. Even if you trade 20% of the time, you don't do anything, it still puts you at six figures a year.
But can we squash, please? Can we squash the what you need to make a day?
I like the what your target is for the day, because it gives me a place to exhale. So there's a number I have in my mind that I think is reasonable for a day. Now there's days I don't hit that and I'm not mad, but on day it's my way to fight against getting upstuck. So upstuck, like you make a big trade and you're up more than what you need, and then you put on another one, and then you fall below that high
nice
water
round
mark
number. Yeah.
And
I'm totally the opposite.
So I think it's probably a personality thing is a big part of that. So for some people, I think the daily target is oppressive and difficult. For me, it feels like it's a comfortable thing, like it's relaxing.
I feel like whenever I have a daily target like that, I either rarely hit it and never exceed it, because it becomes like the ceiling. Whether I mean to do it or not, it becomes like my cap. Like I'm afraid to do anything more if I get close to that.
Exactly. And that was my point. Like for me, the whole daily profit target was a cap. It was a rev limiter. And for me, this has like been my evolution. This, like, if there's ever like one evolution for my whole entire year, it's the risk part. Like my daily risk is a hard line in the sand, period. And there's no question about it. My daily upside is an unknown target. And I feel like whenever I used to always have this goal, like just make $200, and then make $200, make $400, make $400, make $800. Like that was like the whole mantra of the retail. And it really came into its own when you start realizing, or when you start doing the days that you're just consistently, hitting little targets, it's only $100, $200, and then all of a sudden you have a banger of a day and it's $800. And then you consistently just keep that daily grind and keeping your stop loss in place, and then all of a sudden you have another $1,000. Because my old self, I would close out the day, I'd be done.
Right, not looking anymore.
Exactly. I made $400. I made my daily goal. I'm done.
Mm-hmm.
But it wasn't until I started learning that when I lean into those days that I'm on tune with the market, that my P&L just skyrocketed.
I think that sounds a lot like what Rich talks about. Like if you're recognizing you're in that flow too,
Yeah.
you're taking away the caps and the ceiling. I like that.
Yeah, I definitely think that if a daily target doesn't serve somebody well, they should definitely bail on that idea. Um, so if I hit a daily target, I mean, there wasn't a day like I don't remember like 2 weeks ago, but let's just say this past week, there wasn't a day that I hit the daily target that I was like, all right, all done, not trading anymore. The number on the screen doesn't change it so much as the conditions where we are in the market and decision fatigue. So for me, decision fatigue is a big thing I have to monitor.
Mm-hmm.
So how many
Yeah.
decisions have I made? How many times have I put risk on? Am I still making the sharpest, clearest, best decisions? If I am, keep on rolling. Whether we've made $6,000 or $1,000 or whatever. But the moment that I start to slip a little, have some thoughts, I can just feel the decision fatigue. Then that's kind of my metric for being finished. So the number is kind of
What sounds more like it's a minimum for you then.
I mean, yeah,
As
it's like I'm
it's
gonna
like an
get up.
excuse to, it gives you the excuse to say, you know what, I've done well enough. I know I'm not at my top of my game. This is good enough. I can stop.
Yeah, well, like you wake up, you do your work, you sit down. If I hit that target, I feel like whatever happens after that, like that's enough to get me to the desk. You know what I'm saying?
Mm-hmm.
Like I'm not. I
Yeah.
mean, I'm not going to come trade for $100, and that I'm just going to do something else. So having a upside thing that I think like for the work I'm putting in and the time, unless the market's really weird, it's really reasonable to expect to make X number of dollars. And then I think the upside or the past that or the whatever, I just try to keep in mind the compound effect of all of that. Like no one brags about making $1,000. No one's posting on Twitter like, banged out 1,000. I made a G today. Like that's not exciting.
It is.
But
I'd be excited.
yeah, I mean, I know. I'm just saying, like that's not something like it's not.
It's not life changing, so
Yeah,
it's not
the accolades
headline
aren't going to
grabbing.
fall all over you for that.
Yeah.
But in the quiet, detailed approach to your work over a long period of time, that's more money than most people see. You do that for
Mhm.
6 months. You do that for 8 months. You bring that discipline. And if the target thing serves you well, I mean the $500 a day thing was my deal for a long time. 500
Mhm.
bucks, man. Smash out 500 bucks. High five myself. Go play golf. But it was good because it just got boring. Like that, it just was so mundane.
Mhm.
Or there was a season where that was so mundane, and I think we've talked about that before. It almost takes away the pressure or the fear of like losing a trade. All that stuff goes away when you're trading the kind of size that rewards what you want to see and doesn't stress you out when you lose a trade. And then you get desensitized to it in a good way, and then you just add some more size and add some more size. What happened to me is kind of I just thought, well, I'm the best ever, so let's just spool up to way more size than we need to, and then that creates some challenges. But
Yeah,
Yeah,
which
I always call it the gulp limit. Yeah, sorry, go ahead, Banks.
which on that
I'm
point,
curious
I
to hear
mean,
your thoughts.
yeah, I mean the sizing up piece kind of goes back to his original, comment is, I kind of view that coming from like the banking side of it. So, everyone wants the reward, but they don't want to put on the risk. So I think where people struggle is, they're willing to put on a couple micros, but when you go into putting on a couple minis, that dollar amount on the loss is a hell of a lot bigger. And I think that's where a lot of people get stuck in like sizing up is the reward is so much greater and it's human nature to want that, but the downside mental on that is so much greater. When you lose $100, it's a lot easier to swallow when you lose 1,500 or 2,000 or whatever it is. But in the same way, like, you know, when I'm talking about like, so I do like having a number at least in my mind, but I kind of view it on the way, like what the process is or what my trade setup is. So like if I know that I can make X on this trade, like that's what I'm trying to go for. I don't necessarily think of it as like a dollar amount for the day. I mean, I like to have an idea in my mind, like, you know, of X dollars, you know, pays the bills. But in the sense of like cutting a trade or anything like that, I don't necessarily like cut trades or anything, you know, along those lines in those, you know, spots of where that, you know, P&L lies. But I would say like just allowing trades to go through what your process is. And that's why I think people get stuck. And I think Bob brought up a good point. Like the number of trades in a day, like the capacity to just be there and present is such a big thing to notice, because when you start getting into, you know, later in the afternoon, I mean, you're looking at the same charts or, you know, the same couple products for a couple hours. And that's something that I just don't necessarily want to do. But at a lot of the times, like the setups don't happen when you want them to happen. Like you can't tell the market what to do. So, you know, you're kind of at the mercy of what the market's going to give you. And I think, you know, like on those setups is like, I mean, you have to know where, you know, where you're wanting to take this. You have to know on that trade what you're willing to risk. So if you're willing to risk X and you think you know where this is going, that's what I'm willing to sit through and wait on the day. And I think that's another thing is like I would rather sit in one good trade than have to do 10 trades. You know, I used to be the other way, where I used to trade a lot more size, and a lot more flipping in and out of the market. And it became stressful in the sense of like having to be here, having to be present, you know, which was fine for what I was doing. But from what I'm looking at now, like I'm more than fine missing a complete day of trading because I know what my setup is. And if you get that set up and it goes the way you want it to go, I mean, it's a week maker. You could have a one trade a week.
Well, you made more in just a couple trades towards the end of this week than you'd made the entire week. So that's case in point.
I was down going into Friday.
Yeah,
but
slightly,
just slightly, yeah, a couple $100. But it was one of those where like I would have a good, you know, I'd have a good trade, I'd have a stop, and then I'd have work and somewhere I just don't want to sit on there like all day. And you know, I'd pass on a couple trades like during the week. But like I just waited for a really clean setup on oil this morning and just took it. And I mean,
you smashed that.
Yeah. So
Well,
I mean,
Banks,
that's the thing. Yeah, go for it.
You're just like me. We're trading in between work opportunities.
Yeah, and that's the tough part too.
And that decision tree for me, like where you just like this decision fatigue is a humongous deal.
Yeah.
Because for me, like I have so many decisions to make in the morning. I have so many things to do in the morning, the schedule, and all these different things with work. And that decision fatigue like wears on me. And I've absolutely 100%. It doesn't even matter the market whether we're changing between, you know, noontime, lunchtime, whatever it is. By about 10 o'clock Central Time, 11 o'clock Eastern, it definitely wears on me. Like my decision making sucks. And it is something that I've definitely noticed in my trading.
I'm curious if any of you guys, like Baba, have you quantified like how many decisions, like how many trades is suddenly throw up the red flag that
3 to 5. It's 3 to 5, somewhere in the neighborhood of 3 to 5.
Wow, that's it.
Yep.
Yeah, I would say
that's impressive.
I mean, you're on Voice every day. You should know that.
Oh no, I know. I know. I'd like to cut out pretty quick. I don't like to hang around once I feel.
Yeah, I just here's the thing. I just look back at my best days. My best days, I don't trade much more than that, 3 to 5. And really, just like I mean, honestly, like I love the days where you just get one good entry. One great set of scales, leave a runner, throw the peace sign, come back at 11:30 and check on it. Yeah. That's the best. Banks, you said something when you were talking that made me think of something I wanted to ask or mention. Oh, I wanted to say moment of vulnerability. So in our Discord, like Banks is in there, I'm in there, obviously. Kyle's in there, Mike's in there. It's funny that Banks said, like, I was down going into Friday, and then made what he needed to make, banged out that oil trade and whatever else. That right there should tell like everybody that just being in a room doesn't mean anything. Like, meaning I wasn't down going into Friday, and Perdue wasn't down going into Friday, but because of the opportunities Banks had, his schedule, whatever, he probably only took a couple of trades for the whole first part of the week anyways, and they were probably a couple partials and a full stop or something like that. And so it just left him basically break even, maybe down a little. The point I'm making is, like, just because I see a setup and an opportunity to take the trade, like not everyone else is doing the same exact things. That's like a, I think that's like a something I'd like to point out about our room, is that we're not like, yes, I'm sharing my screen. Yes, I think most of the time my entries are on there, but
It's not a big echo chamber, though.
it's
Not everyone's
not.
trying to do the
No,
same thing.
it's not. And the other thing is, I lost more money on Monday than anyone else in the room, probably, or Tuesday, whatever day that was. It was almost $3,000.
Sounds like you're trying to segue into the good, bad, and the ugly segment here.
Not necessarily. I'm just saying, like, I was trading, normal size and let it rip like one too many times, because like I said, 3 to 5, I don't like to take back to back stops. Normally I take a couple stops and I quit. But that day I was like, nah, we're going to get this. And then what's funny is then I just took that shovel I was digging with to dig the hole. I just got a lot smaller shovel, and then I only dug really effective and efficiently. And I sent you stats for what this week ended up like, not to like boast, but just to say, like, that is from trading about half the size that I traded on the day that I actually lost, the money,
Right.
like had the red day. But it, like, when I trade lighter size like that, it forces me to kind of really dial it in, because you're like, you're just aware, like, okay, we gotta like make the most of the opportunities that happen and squeeze the juice out of this lemon. When I trade bigger size, I do find myself closing trades out quicker.
Yep.
Because of the ups, like what I've already yielded, and kind of thinking like, I can swing it around here and it'll be fine. So like even this week, I had a little pivot where I was like, all right, let's just size down and trade incredibly smart and surgical. Turn this week around, have a good week, and we were able to do that. But
Well, I think you kind of are segueing in, so maybe we should just wrap this one up, unless anybody else has any more thoughts on what we've been discussing here. I love that sound effect.
that's amazing.
All right, so this is the segment where we talk about what we did over the past week and the lessons we learned from it. As we like to say, trading is a constant process of improving, and there's always great lessons to learn from the mistakes that we make. So it doesn't have to be mistakes. Could be good, could be bad, could be an ugly, could be the story. Whoever wants to kick us off, I'll yield the mic to them.
Well, I was just telling the story, so
Yeah, well, it sounds like we got your good.
yeah. The good
and
is,
your bad.
so I mean, so the bad was, I came into the week very confident in what I thought would unfold. We built value in a certain way that was kind of slightly flagging me to be careful. I did not heed my own work to the extent that I should have, and whatever day that was, I think it was Tuesday, gave back what I made on Monday, and then that much again. And so I was like, oh, well, we've dug ourselves a hole. And so I think the good, so that's the bad. And it wasn't terrible. I mean, like, it's not that big of a deal. It was just that day was probably, I would say, I had the feelings of frustration slightly, that I don't like to have when I'm trading, because when I'm trading my best, I don't feel that way. And that's some of the stuff that. Go ahead.
I was going to ask, how are you recognizing that?
Well, I was going to say some of the, so listening to the stuff that you guys did with Rich Friesen back in the Two Bulls episodes.
Yeah.
As well as listening to an interview that he did with a trader that he posted where he was asking him all these questions, and it just made me keenly aware of what do I feel like when I'm trading my best, and what do I feel like when I'm when I'm not. And it doesn't have to be a huge blow up day. It doesn't have to be like losing thousands. Normally, I mean, to be honest, like as the market unfolds, it is. I'm like, yeah, that's what we should be doing. Like that's what I'm not blown away that we're trading to this price. I'm not blown away that it's unfolding this way. Normally, I'm with it. Like I'm like, yeah, that's how we're supposed to go. But when what you anticipate to happen doesn't happen, that is a very good sign and something that you should pay attention to. And I just didn't do that well that day, and I just felt this like frustration, like it just like, oh man, why is this? Why? What are we trying to do here, bulls? What? Why do y'all keep buying this? Who's buying this here? Like if I ask the question in my mind, who's buying this here? I guarantee you, I'm trading like an idiot. Like that is
Oh,
the
wow.
silliest question to ask. You know what? Like who cares? They
Exactly.
are.
Should be you.
They are. And it should be you. And so that was the bad that it just wasn't a sharp day, man. I don't know. Like I don't like having not sharp days, and it was just not a sharp day.
I
So
love what you just said there, though, about when you're asking yourself like those questions. Like, think about those questions that when you're not doing well, what you're asking, and make note of those. Because yeah, I feel like that's an excellent. You just nailed that. I think
now, what are the things that are going through your mind? Like
a lot of the things you just said.
yeah, I can't believe they just fill in the blank. Why would you fill in the blank?
Yeah, yeah.
Who is fill in the blank? All of those things, like any of those things cross my mind. I'm like, oh gosh, what am I doing? So that was my bad, that I had a day where I just kind of faltered. And I don't feel an immense amount of pressure being in the room, like being live, having trades live, whatever. Like that doesn't bother me. It doesn't bother me to take an L or like lose a trade here or there. But it bothers me when I feel like it does bother me when I feel like I get a little bit shook. And that doesn't happen often. And shook is maybe not the best. Like, when I get like frustrated, when I start to ask those questions, when I start to feel that way, I'm like, man, I'm probably not leading very well right now. I'm too absorbed into my frustration, and I've allowed myself to be on the wrong side of the market. And that's really what the frustration is about, not about who's buying or whatever. It's what context clues did I miss? And those are days where I call banks at the end of the day and I say, what did I miss, dude? What did I overlook? I don't go home and lash myself on the back with a whip, but I go home and work. Like, what's the nuanced thing that I overlooked? What's the detail? Did I have sloppy pre-market prep? Did I rush through the normal steps?
You know what my favorite interview question is?
What's that?
What do you do when you get angry?
What, like literally, what do I do?
What do you do when you get angry?
Like in general life, or
specifically, I'm asking you in an interview right now. What do you do when you get angry? What is your first response?
It's definitely my first response when I get angry is to ask, is to try to justify why I shouldn't have to feel the way I do because someone else is doing something wrong.
Okay. What if someone else is not doing something wrong?
Well,
what
most
if
of the time,
yourself doing something wrong?
Exactly. And I was going to say, most of the time, it's in a few moments of clarity, I realize it's not someone else doing something wrong. The market's never wrong, or it's not every meeting that I have that the other person is wrong and I'm right.
Mm-hmm.
But that's my default. And so then I talk to people around me to help me navigate through what I'm feeling, what I'm thinking, and what do I need to change. And so it very quickly progresses from an external, like they or them, into okay, what do I need to do? What's my responsibility? What's my next step? How do I move forward?
It's a favorite question of mine because I've noticed it through many employees is It's actually most often it's one of two responses. I get loud or I get quiet.
Oh yeah, that's a good
And
point.
it's something that I will note on every single application of every single employee. When they get quiet, they're angry. When they get loud, they're angry. Like it's and for
Indicator for
me,
you.
yeah, it's an indicator for me as a personal observation. And for me personally, I get quiet. I will
Yeah,
shut
I'm a
Really?
up.
quiet.
You
Yeah,
won't
I'm a
hear me.
quiet.
You?
Yep.
Yeah, I'm
Yep.
a quiet
Wow.
when I'm angry because the wheels are turning. If you'll
Exactly.
notice too,
Yeah.
if you guys
Yeah.
notice too in the room, like if you notice, I guess it was either Tuesday, Wednesday, Thursday.
I got it.
You know what I'm saying? The
Yep.
Yeah.
talking through the trades, much more commentary, much more detail,
Uh-huh.
much more verbal.
Yep.
That's when I'm at my best.
I
That's when
totally
I'm
get it. But that's
when
why
I'm feeling it.
I was pointing that out. But
Yep.
if you can start pinpointing when that dialogue, and you guys know, or you and Banks know, and that I told you I don't like voices in my head when I'm trading
Yeah. Yep.
because I constantly will talk to myself off the mic. I turn my mic off when I'm in your guys' room, but I will constantly talk to myself because it's that dialogue. And when that dialogue starts getting silent, it's a flag to me.
Yeah, that's a
Interesting.
great point, man.
Yeah.
Yeah.
Well,
Yeah, that's a really great point. And I actually asked Banks, like, do you think I talked too much? Because I was just trying to fully be in the moment with what was unfolding, maybe to an extent that I hadn't in the last, in a while. Because normally I'm like, all right, I'm long here, and then I'm like focusing on, I'm just in my own head, like, okay, this is good, this is bad, this is where I want to see, and then like calling out, lines in the sand, like, all right, here we go. This, if we trade below here, above here, whatever. Um, so yeah, much more negative things unfold if I'm like silent in a trade. It's usually not
Mm-hmm.
going my way.
Yeah, so
I'm gonna
Bob,
make a note of that too. If I hear you go quiet, I'll know something's wrong.
What were you saying, Banks?
yeah, what I was going to say is I gave you the answer of you weren't talking too much, but we all know that you were. So
Yeah.
That's fine. We all know that I talk too much all the time, but I'll tell you what, those that
Yeah, but-
commentary, that was
yeah, it's
solid.
awesome.
Yeah,
Yeah,
it
it
was
was
good.
it was really good.
All right.
The
now that
good,
you've
the good of it, the good of the whole thing is
Still
that
going.
I know I'm still going. Don't play the music, Kyle.
my
Let me-
pre-market is only going to take 15 minutes of the 30 minutes pre-market.
they're pulling me off.
There it goes. No, go ahead. Finish your thoughts, man. Finish your thoughts.
I just wanted to say the positive is, and the upside, and I appreciate Perdue. I appreciate that question and that conversation. I felt like we got a little counseling moment there for a second.
Yeah, we did.
The positive was realizing that there wasn't big damage done, crisis, nothing bad, and let's size down and focus up. And I think the skill of a trader, and this is something I am proud of, is that resiliency. That you're to, like the Leon Edwards Kamaru Usman fight at the last 15 seconds where he KO'd him with a head kick. Right before that, his coach said, "Come on, Leon, you got to pull this thing out of the fire." Now, we weren't down to that point, but sizing down, getting sharp, and really focusing on staying within the process for the rest of the week, finish with a really good week. So that's the good of it.
Fucking well done, dude.
Awesome.
All right. What about you, Mr. Banks?
Yeah, so I just looked back at my my trades for this week because I was curious. I took 8 trades all week. So I had a pretty busy schedule all week, and you guys were aware of this, and setups were kind of in meet in between meetings and stuff like that. So I guess my good is something that I've always had to work on is the red days, making them small red days. So yeah, so Monday I really didn't trade. Tuesday took like a small little haircut loss, took one stop. Basically just cut it after that, was busy the rest of the day. Wednesday basically had like a break even day, took like 2 break even stops. Thursday was my bigger loss day, which actually, looking back at the actual setup, I should have never even taken it. It was something that I thought I had the correct setup, and looking back at it, I didn't have. It was more like I thought it was an A, and it was really more like a B minus because it didn't all line up. But I would say the good thing, I didn't have anything horrible all week. Basically, just had a pretty mediocre week until today, and I think the good is just staying patient and staying within the process. I think it's something to where when you have a couple days where you're busy and you want to be in the market and you see the setups after they happen, and I think you can get a little bit impatient. So I think the good thing about this week is staying patient, staying in process, and not being, I guess, jumping into the market when I am not fully focused.
That's a fucking phenomenal, dude. That's a hard thing to do when you miss moves, especially if you miss multiple trades, to go back and look at it and not try to force something. Like, is there something that you do to help you like not chase and not try to make bad decisions like that, or is it just
Yeah,
discipline and
I mean,
experience?
I think it's just maturing in the fact that like I know when my setups are going to work, except when I thought it was a setup and it wasn't. Um, but I think if you rely on your setups and rely on your process, like the vast majority of trades that I'm taking are in basically where trend start is, or, on reversals or whatever. But it's in zones of interest only, and I think
Hmm.
that's the main difference is. And with what we're looking at now, it's almost like a waiting game for time sessions, to where I feel the most comfortable entering these positions. And you're aware of like the cycles that we're looking at and what we're looking at on a timely basis. So like it's that's actually made it a lot easier to be patient, because I'm basically waiting for a specific time in the market in a specific area in a certain condition for an entry. So
Yeah.
it makes the entries a lot easier.
Yeah, and I love what you're working on there. I can't wait till you guys roll that out because I think it's going to open a lot of eyes there. I know for me, I found when I trade the right times, it's those are so much easier than trying to trade those other sessions.
Yep.
But Banks, like, because that's been a humongous turning point for me as well. I feel like we're in the same space as far as when we can trade, when we can't trade.
Hmm.
Yeah.
Isn't it like really head turning when you start identifying when I can trade, where I want to trade? Like that has like been like the most mind blowing thing to me this year.
Yeah. I would say it's been huge, even in with like what we're looking at over the past couple weeks. Like I've just noticed like where my trend or like where my trades happen during specific cycles of the market. It's just eye opening. Like you'll be in a spot where like we're accumulating price, and you'll basically have a switch in time, and you get that manipulative move
Yeah.
out to the bottom, and all of a sudden you get an entry setup. But during that whole time of we were in the area of interest, but it wasn't a setup yet. Where in the past I would be entering in that trade, and I'd be in that trade for 30 minutes, 40 minutes, whatever it is, and all of a sudden I have the actual setup. But then once it moves in my favor, I'm like, well, I've been in this for 45 minutes. I'm going to get out of this trade at break even. Snaps back to where my actual entry is today, and that's when I'm entering. So, and it's just a time thing. It's waiting for specific times of the market where the conditions are right, and it's exactly like you said. Like it is eye opening
Yeah.
because the moves that you enter happen almost immediately. I was looking back at my trades, like my successful trades are like 4 minutes long. Like on a lot of
And,
these on TP1s, like they're moving where I want them to move quickly.
and it for me it's been eye opening on back testing. It's been eye opening on forward testing and live testing. Like it's amazing sometimes. Like when you start looking at your charts and realizing where you should be taking a trade and where you want to take a trade, and the stuff happens that you planned to happen,
Yeah.
and like I think Flurry said, I'm positive Flurry said it at least once, but like you do all this work and do all this planning over the weekend or whatever it may be, and you watch it unfold it's just like, why didn't you just let this go?
Yeah, absolutely.
This Friday, November 10th, for me, I nailed a perfect destination trade, and that is a flurry, patented, trademark, whatever you want to call it. It's where you go from one side to the balancer to the other side. That's the first person I called, or where he called the destination trade. I go
Uh,
from one side of a balance to the other side of a balance, and I nailed that today.
you freaking nailed that trade too.
Thank you.
So that's your good.
Yeah, that's my good.
Didn't you like nail the whole week this week though?
Yes,
Let's
this
be
week
honest.
is a record week for me.
Oh, damn it. I need an applause on here.
Thank you. Um,
Thanks, Baba.
but yeah, today was a perfect example of a destination trade. If I was looking at ES, the balance area low on November 10th was 58.50. And that exact level, we created a lower high and just ripped from there on. And I tried shorting 3 times because we were below the 50% line of the balance area, and I was continually trying to short, try to get outside of balance because that's what I do. And I saw the smaller time frame Quasimodo pattern. Um, it just ripped, and I let it go. So I took my profits, I added based on my driving bar strategy,
Mm-hmm.
and when I added on my driving bar strategy, I then actually had to leave the PC or leave the computer, and I left my stops in and let it go. On 2 of my accounts, they actually exited at the weekly and monthly highs.
Ah, beautiful.
It's like one of those like once in a month trades. Like just everything lines up, everything perfect, and just skyrockets.
Do you have any bads or uglies you wanted to talk about?
Oh, my bad was actually was that today? It was today. I moved my stop.
Oh, no.
Yep.
Which way?
At the very start of the open, I had a situation in my strategy where I should have been short.
Mm-hmm.
I got short and I moved my stop down. I think it was like one tick below or low on
Mm-hmm.
Friday. And what happened is that it stopped me out and then actually proceeded to my T1 and T2. But it was that pissed me off.
I
It
remember that
was
now. Yep.
yeah.
Yeah.
I moved my stop because on a structural level I should have been moving it down because OR low was on the 30-second. OR 30-second was hit.
Mm-hmm.
I should move my stop down, and that wasn't to the strategy. It knocked me out, and then proceeded down to the targets.
Yep.
It was a frustrating situation, but that's part of my good.
Yeah. I'd say so because you recovered from that
Yeah,
beautifully. Like,
thank you.
if I would have, the same thing would have happened to me, there's a good chance that I would have probably had a pretty bad day.
That's like the epiphany of like every single retail trader is to be able to flip long and short.
Actually, I think you're segueing into my good and bad.
Okay, what's that?
Well, my good was cutting a runner at like the perfect spot, which thank you, Banks, for helping with the assist on that one. I was like maybe 2 or 3 points from the low when I closed out the last short runner I had.
Absolutely. You're welcome.
But as I was watching that and unfold, and I saw the driving bar that I think that you probably added on, or maybe the one that you probably like initiated at least something of your position for that long, and fear stopped me from being able to take that. I was too afraid of what the Bears were doing in order to even participate on that one.
Do you have any practice adding to your positions?
That wouldn't have been an ad. That would have been. I was flat at that point, but I was afraid to trust anything the Bulls were doing because I just watched the Bears slam a bunch of size down, and I knew in my head, and I was watching. I was like, man, if these guys get run over, this thing's gonna rip, and it did. But it was just fear, man. I was afraid to take the risk. I was afraid to risk anything more after getting a green day that I was happy with, if we put it that way. Like it wasn't a daily target, but it was a number that I was happy with.
That is a rich reason topic.
I know. In fact, maybe we might have to bring that one up when he comes in.
I really think when you're right, that has like been a humongous turning point for me.
Mm-hmm.
When you're right is pushing it. And when you're wrong, cut that crap short as fast as possible.
The good thing that I did was not chasing that. When I missed that long, I didn't go in and try to find another trade somewhere else. Like I just hung out with you guys. I chatted, talked shop, and then closed up the charts and went about my day. Like I gotta say, man, out of all the traders that I've met doing this, I think you're probably one of the people that's helped me in my development quite a bit, or at least more than most. You're good at telling me when I need to do something, and you don't shy away from it. I remember having a really deep heart to heart with you. I think Joel was there with that one too, where you just basically stressed the importance of back testing and finally made the point come through. All right, okay, we're starting to go a little bit long here, so let's. I think we move on, get these bold predictions done, and we call it a night. What do you guys think?
Let's go.
Yeah, I'm down.
Okay, who has got a bold prediction that wants to kick this thing off? Who's got the boldest prediction? Let's start there.
I got the oddest one.
I think we save yours for third.
I'll go back on my bank one. Except, is there a time frame on this?
I think as long as you specify the time frame, we'll be generous with that.
So by the end of the year, I expect at least 1 to 2 bank closures. How about that? I went on the opposite.
Okay.
And the reason why,
Judging by the headlines I'm seeing, that might not be that bold.
well, I'll give you the reason why, and that's
Yeah.
coming from the banking industry. I just read an article that the banks in the U.S. are carrying $650 billion of unrealized losses from these bonds.
Is that one of the ones I sent you?
Yeah, well, I went back and read it. We are actually up. We are up 15% since the end of the second quarter on
But-
those because of the October push on bonds to the downside. But I was taking it from my banking, kind of expertise is you're going to start to see a lot of bank losses too. On top of that is loan loss is going to be a huge thing going forward.
Oh, yeah.
So you have unrealized losses that are hitting the books, but you also have actual loan losses that are hitting the books because rates have jumped where, you're going to see a lot of these rates on the 3-5 years, terms that are being renewed in this end of the year, beginning of next year, going from 4% to 8%. And there's a lot of these businesses, they just can't handle that type of movement.
I'm sorry, but I was told that it's all synthetic.
Well, it's all fake money anyway, but
yeah, I saw a lot of those bonds were. So I saw a lot of those bonds were supposed to be held to maturity. Is that not the case?
So there's 2 ways that you can buy bonds: is you can buy them for hold for maturity, or you can actually you have to list them when you buy them though. It's hold to maturity, or basically you can sell them at any given time. But the rates on the bonds that we hold at our bank are all for sale at any given time. The issue with those is that the yield is lower on those bonds. But so like a lot of these bigger banks got caught up buying these longer term bonds at low rates or 2%, 2.5%, but they got to hold them for another, 6 years.
Right.
Crazy.
So,
okay,
yeah, I don't know if it's full, but I just went back on what I did.
I'm writing it down. 1 to 2 by the end of the year.
Which is scary close because we're less than a month and a half to close the year out.
I know that's kind of what I was just thinking. All right, Baba, what do you got for us, buddy?
All right, bold prediction. Most people could tell from my accent that I'm from the southeast of our great country. And there's a football team that I'm partial to, be the University of South Carolina, Fighting Gamecocks, if you will.
Oh, yes.
And my bold prediction is that they win out the rest of the season.
What? Wait, who are they playing? South
They have to
Carolina?
play Kentucky, Vanderbilt, and Clemson University.
That's funny.
Think they're going to beat Clemson?
Clemson's garbage this year.
It's a bold prediction, man.
Okay. All right.
Kyle.
Win out the year.
That's right. Went on a high note. We're gonna go out on top, baby.
Well, we'll know tomorrow whether that's going to be true or not, or potentially
That's right.
true.
That gives me the chance next week to make up something different. So
Right. All right, Perdue. What do you got, man? What do you got for us?
Okay, so I'm actually changing my
What?
easy one.
Oh no, forget the easy one. Give us the good one.
So yeah, the funny one that Jen and Yellen will say the F-bomb in the next 2 weeks. I feel like that's the new norm of our government facilities. So
wow,
yeah,
that's hilarious, dude.
2 weeks. So
Two-
November
Does
10th.
Can Janet Yellen say? I have a hard time picturing her in that. Oh God! But I never would have expected Powell to do it either. So
I hate Powell.
yeah.
But
we know.
as soon as I heard that, I was like, God damn, he is one of us.
One of us. One of
Yes,
us.
exactly. Just close a door. But if you want an accurate prediction, I will say ES next week will hit
Bonus
47.
prediction.
ES next week will hit 447. That's my bold accurate prediction. 447.
That's only 3 numbers. That's pretty bold.
Excuse me?
447 is only 3 numbers. That's pretty low. I don't think it's been that low since like
God damn. 4447. 25.
447. Okay, that makes more sense. All right, I've got one for you here.
Okay.
I'm gonna go with Cisco has earnings coming out next week. I can't remember if it's Tuesday or Wednesday.
Earnings stock?
Yes, I am going to say that they are going to beat earnings, but the stock is still going to drop, and we'll be able to go to Reddit and see all the accusations of the market being rigged floating around in there. There'll be cries of manipulation because you all know how Reddit loves to act.
I love it.
Okay, all right. Do we make a show, guys? Can we wrap this thing up? Get Mike to bed?
Absolutely.
Get Mike to bed, Jesus.
It's like an hour and a half past your bedtime. Okay, folks, that's going to do it for today. Thank you, Baba. Thank you, Banks. Thank you, Perdue, for joining me this fine Friday evening. And thank you, everybody, for sticking around to the end. Thank you to the live stream guys for listening in, too. Remember to check out that new combined Discord. We can trade with us during Friday M period challenges. You can tune in live to these recordings. Please show our panelists some love by checking out their links in the show notes. We'll be back soon with another exciting episode full of new names. But until then, share this with your friends like it's a video of Powell swearing. And take care. This podcast is intended for informational and educational purposes only. It does not constitute financial or investment advice and should not be construed as such. The hosts, guests, and contributors of this podcast are not licensed financial advisors, brokers, or professionals. Any trading or investment decisions made based on the content of this podcast are solely at the listener's discretion and risk. Trading and investing in financial markets carry inherent risks, and past performance is not indicative of future results. Listeners should conduct their own research and seek advice from qualified financial professionals before making any financial decisions. The views, opinions, and information shared in this podcast are those of the individual contributors and do not necessarily reflect the views or policies of the podcast creators or associated organizations. Produced by China Shop Productions.